Hello and welcome to an FX Times daily video recap. I'm CMS Forex market analyst Nick Nassad. Today is Wednesday, November 18, 2009. The euro gained against the dollar tonight, especially overnight, as we had oil and gold rallying, which helped higher yielders like the euro. Oil regained the $80 per barrel level, while gold hit a new all-time high at $1,152.75 per ounce. In New York trading, we saw some weak U.S. data, which gave us this consolidation here as the steam in the rally sort of ran out. Though we did have a second little leg that tried to reach the 1.50 area but was unable to do so. We broke a short-term downward sloping trend line around the open of European trading, and then we saw this rally, and now we set up a short-term upward sloping trend line that connects a good amount of our lows from today's trading. Part of the weakness in the greenback today, especially this sort of volatile blip here, came as Federal Reserve Bank President James Bullard said in Clayton, Missouri, in a speech that the Fed could keep its key short-term Fed funds rate at near zero until early 2012. Now, that seems to be a bit of an outlier of a statement compared to other Fed officials, and he is not a voting member on the Monetary Policy Committee, but still, it sort of, opened some eyes with his comments. However, if we just zoom this pair out, we see that we're trading inside of a pretty well-established range since November 4th, with our low near 1.48 and our resistance here near 1.50, and we'll see if this sort of pattern of bouncing up and down between the ranges extends into the rest of this week's trading. In a look at the euro-yen pair, we see that the euro rallied rather strongly, about 140 pips from low to high in today's trading, after we hit a low around 132.50 in yesterday's trading. This pair has been in a bit of a downtrend in the last 6 sessions or so, though as we've had some lower highs and lower lows here. But today's trading did break a downward sloping short-term trend line, and we found resistance right at the 134 level. Zooming this pair out to 4-hour candles, we see that the yen gained rather strongly to end October, and we set up some important resistance here around the 135 level, and we had this sort of downward channel now, and we did test this resistance, downward sloping resistance, as we saw in the shorter time frame. So we'll see if that means that we might have a move back up in favor of the euro, which was a pretty strong performer today, or if this is just a temporary one-day move and we sort of continue this period of yen strength. In a look at the pound-dollar pair, we see a very different story than what we saw with the euro-dollar. Here, the greenback gained in today's trading as the pound was pressured by the Bank of England meeting minutes that were interpreted to be rather dovish. First off, there was a three-way split in terms of the expansion of the quantitative easing program that the Bank of England has been running. Though the majority voted for a £25 billion increase, there was one vote that favored no change, while another, David Miles, wanted a larger $40 billion expansion. But the surprise part of the statement was that the Bank of England considered the possibility of cutting the interest rate paid to banks on a portion of their reserves that they kept with the bank. This move was debated in order to perhaps try to facilitate extra lending, and that was the key driver of the market response, and we definitely fell lower in today's trading. We can see a couple of levels of support, one being the 1.68 level here, and this sort of trend line that was tested a couple of times, and then a horizontal line around that same level using the lows from yesterday, around 1.6750. That level first acted as support, and now it has turned to resistance. Zooming this pair out a little bit, we can also draw a Fibonacci retracement to our rally in the pound-dollar pair from Monday's trading, and see that the 1.6750 level was around 61.8% retracement of this pair, while today's support came at 78.6%. retracement of this rally. We can also change this short-term support trend line to encompass a couple of extra lows from this week's trading, and we see that we still broke that area around that 1.68 level. The euro also saw some strong gains against the pound, rallying about 100 pips following this low yesterday, which goes all the way back to September 15th. We had drawn this important trend line here around the 0.89 level, as that was our low from November 9th, and we see that we had some consolidation around that level prior to our move down in yesterday's trading, and then following our rally today, it too acted now as a point of resistance, though it was cracked as well. We're still in the midst of a bit of a downswing, though we did break a short-term trend line here, as we have 3 consecutive lower highs and lower lows, but we'll see if we have a continued move in favor of the euro following the sort of dovish Bank of England. In fundamental news from the US, we saw housing starts for October fall 10.6% on an annual pace to a seasonally adjusted 529,000. The fall comes mainly as homebuilders were cautious over the uncertainty of the renewal of a tax credit for home buyers that was extended this month. Building permits also fell by about 4% to a seasonally adjusted 550,000. Taking a look at our graph here of housing starts on the right, we see that we have bottomed out from our decline starting in 2006, and that we're hovering around this 500 to 600,000 level. So we see this very flat sort of trend line. So until this sort of picks up, we are going to say that the housing sector is just bouncing along the bottom for now. In a second release from the US, we saw consumer prices rise 0.3% in the month of October, which was slightly stronger than expected and slightly stronger than the previous month. That rise dragged the annual rate up to a negative 0.2%, which is the 8th straight month that we've seen annual prices negative. The core rates were up 0.2% on the month and increased 1.7% on the year, showing core prices were beginning to move up. Still, this inflation data doesn't pose a risk towards higher inflation just yet, and shouldn't put any pressure on the Fed to change its outlook for when it might raise interest rates. Though the data didn't have much of an impact in currency markets, it did sort of weigh on US stocks, which were slightly down for the day. As we saw the greenback gain against the pound, we also saw it gain against the Canadian dollar. We fell in overnight trading as the greenback was generally weaker against the euro and pound, but then prior to New York trading, we did have a bounce up. The greenback actually finished the day higher. Canadian consumer prices, which came out today, though I don't have a slide for it, were down 0.1% on the month, which disappointed forecasts on the downside. So low inflation was part of the reason that the Canadian dollar was weaker in today's trading. We can also set up a trend line of support here starting with around the 1.40 area and 1.45, sort of in the zone where you're seeing some pretty strong support, where so far the Canadian dollar has been unable to move lower. Now let's take a look at some upcoming releases. Tonight, Japan is going to post its All-Industrial Activity Index, while overnight we get trade data from Switzerland, and then the UK will post its retail sales, measure of public sector net borrowing, and data on its money supply. Tomorrow, the US will post its weekly jobless claims, the Philadelphia Fed Index, and its leading index provided by the Conference Board. Canada will post its international securities purchases, its leading index, and a measure of wholesale sales. And that will wrap up this daily video recap. Thank you for joining me here at fxtimes.com. So for more videos analysis, please do join us on our website. And thank you for watching, and happy trading.